I'm Janina Petrowska. We've been supporting Web3 crypto blockchain related projects since 2017 in Switzerland and Liechtenstein. And we've done over several dozens various token offerings, starting from utility token offerings up to tokenization of real world assets, pretty much everything you could think of, physical diamonds, golds, platinum, other minerals, and of course, real estate all over the world in different countries. And today we have a pleasure to discuss specifically tokenization of real estate with amazing partner tokenization platform STOBox, with Boris. So I have a bunch of questions prepared for you. So I will grab one, and it would be great if you could then introduce the platform, what you guys do, and answer these questions.
Sounds great. Thank you a
Yeah.
lot for inviting me. It's a big pleasure to speak with you. Like, if I could choose whom to spend Friday afternoon with, you would be in the top of my list. So it's a great pleasure to have this discussion.
Oh, that's very kind of you. That's very kind of you. I would also like to spend more time with partners like you guys. Since we've been involved in a number of projects, it's been a pleasure so far. So, and it is great to discuss from what we have learned. It's been a learning curve, what we have learned all together about tokenization of real estate. So, what would you say? Why actually tokenization of real estate? What are the major advantages of bringing this technology to the world of real estate? Securitization, or let's say broader fundraising?
Mm-hmm. Okay, firstly, a few words about myself. My name is Boris. I'm co-founder at STOBox. STOBox is a turnkey provider of tokenizing real-world assets. Our primary offering is the technology, but we also support clients operationally in the project management terms. We provide legal assistance through a network of legal partners like Janina. We provide consulting on what kind of assets should be issued, and in this form, we basically serve as a primary partner, guiding you throughout the entire process. We worked with over 60 projects across all 5 continents, across very different asset classes, ranging mostly being real estate in terms of offering sizes ranging from $1 million to $300 million. So very different projects, cross-border issuance, all level of complexity. And this was a fun learning journey. Now, getting back, and in terms of technology, our primary offering is a white label tokenization platform, which you can use to onboard investors and issue actually sell your tokens. A token protocol that enables compliant existence of tokens on blockchain, and the solution for on-chain identity. Now to real estate tokenization and why clients come to us, there are several critical reasons. One, and the primary one, is liquidity, that is capacity for fractional ownership in real estate. To put it differently, many people believe that the primary benefit of tokenization is fractional ownership of real estate. And this is a benefit indeed, but theoretically you can accomplish it even without blockchain. There is such a thing as real estate crowdfunding in the US. You can own bundles of property through real estate investment trusts, for example. So some of this can be implemented off-chain. However, there are some unique approaches that it's challenging to implement without tokenization. One of them is tokenizing single properties. That is tokenizing a single residential apartment was like 50,000, 100,000, or something larger like $2-3 million, like something we are doing with Janina in UK. So tokenizing single apartments in a way that enables liquidity for the shares in property to be traded is something that is hard to achieve without blockchain. And liquidity matters because usually the yields on property are in the range of 5 to 10%, and that is if you can't realistically exit. You need to wait the 10 to 20 years in order even to break even on your investment. And this is not such a good deal. Thus, it becomes much more attractive when you can actually trade your stake in the property. And if you are a small investor, without blockchain, selling your $1,000 share in a like $1 million property is challenging, because just from the perspective of administrative challenges, it is not justified for property owners and other participants even to engage in such a small transaction. So usually remain locked up. With blockchain, it becomes easy. You like relatively easy. You go to your exchange account or to your swap account, and you sell the tokens in a few steps. So this becomes much more affordable to investors. This is the primary advantage. And there are some additional benefits as well, such as possibility to reduce expenses on compliance by having some of the compliance rules embedded on chain. And the more complex your offering is, the more jurisdictions you have, the more investors you have, the harder compliance is, and the larger is the scale of the benefit. There are some types of offerings, like with many small investors across jurisdictions, that are just unfeasible to do without embedded on-chain compliance. So this is another benefit that I'd like to highlight. And speaking on the topic of compliance, it would be cool to hear from you, Janina. What do you see the major aspects, legal aspects involved in real estate tokenization? What has to be done from a legal perspective for a successful and compliant tokenization?
Okay, so to start with, I would really mention that everything related to tokenization of real world assets, in particular real estate, it is a complex project. A lot of projects, a lot of asset originators which come to us, and they oversee it. So there are at least 3 or 4 major parts. One is, and only one is legal. The other one is technical. I would say tech, and then one of the most important is investors relations plus placement agents, or broader called investors relations, because sometimes projects have their own investors network which they can engage, but in a lot of cases they really need to involve either private equity, VC, consultants, or placement agents, or both. And then if they would like to go, let's say, to retail investors, it is also marketing involved. And in general, also there is a marketing part. So all of that needs to be, let's say, planned and budgeted, and also managed from the project itself. Or they should have, let's say, someone who would manage all of these 4 parts for them. This is important just to say in the very beginning. And it has been really a learning curve for a lot of projects who have been involved in. Now they understand, but they understand it mostly only when after they decide to start the project. Then they see how many efforts and time and energy they have to spend to make it happen. I would compare it, if we talk about, let's say, fundraising with private equity and IPO, I would say that tokenization is something in between in terms of time, money, efforts you need to put in. So this is an important project. From legal perspective, at least in the jurisdictions where we operate, Liechtenstein and Switzerland, since those jurisdictions have been really advanced, and in Europe in general, with MiCA and alignment of national laws ongoing right now towards MiCA, the European regulation on crypto assets, which actually doesn't so much involve tokenized securities, but still we are quite advanced, and it is already consensus among legal professionals and regulators towards tokenization that most of the options available for real estate are, let's say, nothing but good old securitization, mostly. Sometimes you can try to create some kind of new securities using this technical wrapper token around it. But mostly the options that we have seen so far are, in case of one object, you tokenize voting, non-voting shares. If you have more than one object, then you are, in most of the jurisdictions that I know, you have to deal with the collective investment scheme or similar structures, which is known as an investment fund. In Europe, alternative investment funds mainly are used for tokenization of several real estate objects. And then you have bonds. And sometimes I have also seen, mostly securitization is either you have debt or equity, and then there are, let's say, different subcategories, or you can think of making it more creative, but this is mainly the main categories, debt or equity. So bonds, structured bonds, we have seen various kind of structured bonds on the market too. But these are the main options available. And I have seen also so far, for example, when you tokenize in the forms of vouchers, opportunity to rent or use future apartments that are being built right now. That's what the legal structuring options that I have seen on the market so far, which are really similar to traditional securitization as we know it, but with let's say technological advancements that you can make distribution, compliance way easier online and on chain. Somehow it helps to, let's say, to accelerate the securitization of real estate, make it more liquid, as you said. And one also extremely important part is not regulatory or legal, which I've described right now briefly, but also compliance, onboarding clients. If we talk about onboarding clients, I mean, either you accept funds in fiat, or you accept fund in crypto, USDT. And from that perspective, this is also not really, I mean, this is not really specifically regulatory or legal work, but having bank accounts, for example, for projects which would like to tokenize something, since it is considered to be high risk in terms of compliance. Everything where you have just the words blockchain, token, crypto is immediately red flag with any compliance in any country that I know still. It is okay. But it is not easy. And most of the banks, which, I mean, we have over 30 banks in our region, which somehow claim to work with tokenization and crypto. But at the end of the day, it still takes months to open bank accounts. And if you raise quite substantial amount of funds, I don't know, starting from several millions, having accounts with e-money provider or payment institution wouldn't be sufficient, because the risk of keeping a lot of funds with them only, or keeping funds with centralized exchanges. You have to have this risk management in place where you manage your cash flow, also exchange rates. This is extremely important. And the third part would be also, as you mentioned, compliance when onboarding clients. That takes quite a lot of time. This is not really a rocket science, but still you have to have the technical tools in place. For crypto, you need travel rule solutions. And for onboarding investors, it also takes, let's say some time and efforts to onboard them properly. But in my opinion, it has been made easier with all of these technical tools, as it used to be if you had to do onboarding manually. Well, yeah, that's a broader picture, a long answer. I have some questions also for you in regard to, let's say, technical financial parts. Yeah. I'm just checking which of them would be really appropriate. I would ask you maybe that you could sort of describe how it works on a technical side, because what I've did right now, I've described like the main parts of the legal work, regulatory, banking, onboarding investors. Could you also give an overview about how it works in general from technical perspective when a project comes to you? Let's say they would like to tokenize a to-be-built hotel in Mexico.
Sure. Happy to provide an overview. And by the way, I loved your detailed overview. And especially the fact that you speak not only about the things that immediately pop up when you think about tokenization, that is crypto regulation and securities regulation, but also about things that might seem more boring, but actually might become even a harder issue, such as banking and investor onboarding. These are the nuances that everyone should consider when engaging in tokenization in order to conduct it in a compliant way. So it was great to hear you mention that. On the technology side of things, generally, technical infrastructure has three layers to it that have to be considered. First layer is just blockchain itself, a distributed database in which the token exists, and and this part of building an infrastructure boils down to choosing which kind of blockchain would be more applicable to this specific kind of project. So the blockchain, first of all, has to support smart contracts, which not always do. It has to have proper scalability. It has to have transaction fees that are in line with what your investors expect. That is building on Ethereum, for example, would be more applicable for transactions done by institutional investors, but fees in the range of dollars or even dozens of dollars would not be workable for retail investors. Ourselves, we primarily work with Ethereum and EVM compatible chains, such as Polygon, such as for some clients who are less risk averse, Binance Smart Chain, if they prefer working with this blockchain. And we are considering some other Ethereum layer 2s, such as Arbitrum or Optimism. But we haven't really explored them. And so far, Polygon has been the best tool so far. Our clients prefer working primarily with public permissionless blockchains. We noticed that many more institutional issuers and even regulators have preference for private permission chains, but this is the reason. But I believe primary reason for that is because they might not be aware that it is more than possible to control compliance on public chains as well, and therefore, given that it is possible to ensure full compliance while working on public chains, it does make sense to use already existing public infrastructure, because otherwise you would have to set up your own private chain, and this is associated with significantly higher development expenses, significantly higher maintenance expenses, and paradoxically poorer security, because now you maintain all the nodes itself instead of this being maintained by thousands of validators across the world. So if security is one of the issues why you'd like to shift on chain, then actually using public blockchain is a preferable option, and this is what we usually suggest to the majority of our clients. One instance in which you would have priority for private chain is privacy, because transactions in blockchain are pseudonymous, and in the instance if you don't have if you believe some of your transactions might be compromised.
Boris, we might have lost you.
Oh, okay.
Okay, you're back. You're back. That's good.
Okay, thanks God.
Yeah, you ended with if your transactions may be compromised.
Yeah, so speaking about private chains, one option in which private chain is an acceptable option is if you want higher degree of privacy, because transactions in public blockchain are pseudonymous, and therefore, if someone would find out, or if it would become, if your blockchain addresses would become publicly known, then many of your transactions would be seen, which isn't always a huge problem. But if your fund relies on a highly private, specialized strategy, which would be ruined if it is replicated, then working with a private chain would make sense. Though I'm very curious to look at the further privacy features that would be rolled out in some chains, such as zero knowledge proofs, so maybe higher degree of privacy would become possible in public chains as well. But for most instances, public chains work pretty well. So this is the first layer, blockchain layer. Then the second layer is the token protocol. That is, what kind of smart contract would be representing your token. And basically, one of the big benefits of using tokenization is that your securities become smart, and some of their features can be built into the security itself, into the token itself. And our primary focus is on having compliance features built in. The most important basic one is whitelisting. That is, you want that only investors who have been verified, who passed identity verification, who passed risk screening, to have the technical possibility of holding the tokens. That is, wallets have to be identified as belonging to certain individuals, and those individuals have to be verified. And what it means is that random people who you might not necessarily want to hold your tokens, I don't know, people from Afghanistan, Iran, or just who do not correspond to your compliance profile, let's say non-accredited investors from certain jurisdictions, won't be able to hold the token. So this is a basic level of protection that is built in on the level of smart contract. Another point that you definitely want to have is asset recovery. In case with some other crypto assets like Bitcoin, if you lose private keys or access to the wallet where you hold your Bitcoin, you lost your Bitcoin, and now it is unrecoverable. And this is attainable in some context. But when it comes to securities, your legal right as a shareholder or other kind of claim to the company is guaranteed, and the company has or you as an issuer, you have an obligation for investors to have possibility to enforce and account their claim on your company. And therefore, if they lose access to their token, there has to be possibility to restore their ownership of tokens. And the way it is implemented in our contract is via a combination of functions of burn and mint. That is, it is possible to burn tokens on one wallet and mint them on the new wallet after the new wallet is also verified. So this is an asset recovery function. You can also put limits on the secondary trading, which is something we, for example, if you want to verify trades that are higher than certain amount, or if you want to limit your trades temporarily while you're doing some kind of migration, corporate action, etc. This is the kind of functionality you also want to have available. And there are many options what you can have built in. For example, you might build a certain distribution schedule that if this is rather rare, especially for real estate, but if let's say your activity is fully on chain and you do have a wallet that consolidates your revenue, you might have automated distributions from that wallet scheduled at certain times. Typically, I recommend against having too much logic hard-coded on the level of smart contract, because it actually reduces your flexibility in terms of payout schedule, in terms of how do you monitor your revenues, etc. So it actually puts unnecessary constraints. So my preference is for having few functions, but those functions having very versatile use cases for all kinds of corporate actions you would like to do with your securities. So this is second layer of infrastructure. And then third layer is a Web2 interface that users will use in order to interact with the token, because most users are not and should not be sufficiently advanced in order to interact with token through blockchain itself via sending API calls, via Etherscan, etc. You want them to have a simple, convenient user interface, a Web2 platform that they will use in order to interact with the token. So this is the third aspect that has to be provided. And it can be a kind of like a blockchain crowdfunding platform when you have multiple tokens arranged on that platform that investors can purchase. It can be an exchange, interface of a tokenized exchange through which the tokens can be purchased. It can be your white label platform. This is how we work at STOBox. We provide you a white label platform that becomes part of your website, that it is hosted on your subdomain with your logo, your company name, and only your tokens. So this is another option that means that you don't compete with all tokens on the same platform. You just onboard investors on your own platform, and you basically own investors who own contact of investors who have been onboarded to your platform. And within the context of Web2 platform, you have to consider how you're going to store the investors' personal data, which they submit to you, that you don't want to be leaked from the perspective of GDPR. So you need to have proper data protection policy. You need the data to be stored on a separate encrypted server, etc. It isn't rocket science, but this is something that has to be taken into account and taken care of, because data leaks can be an issue. One point to consider is whether your platform is going to be custodial or non-custodial. We usually work with non-custodial platforms, which means that users bring their own wallets and they connect those wallets to their platforms, and you send the tokens to their wallets. The drawback of that solution is that investors have to create those wallets separately. They have to maintain private keys to those wallets, etc. So an alternative is a custodial system, wherein you create and you maintain wallets for investors on their behalf. From a user experience perspective, this is significantly more convenient, especially for non-sophisticated users, but it creates much higher cybersecurity burden on you, because now you have to ensure that no one has access to those wallets. And given that these wallets can potentially store not only tokens which you can restore, but if you pay dividends in crypto, they can store, for example, USDT that you would pay to your investors. You become much more prominent cybersecurity target. Obviously, so this is one factor. Second, it can also have regulatory implications. That is, you hold securities on behalf of your client, therefore you do securities custody, maintain securities accounts, and this may be either a securities custody or investment firm.
Yep. That's so true. This is regulated in most of the jurisdictions, either centralized depositories or new regulation, DLT trading facilities. But still, it is, let's say, higher level of regulation and higher level of cybersecurity and other risk and responsibilities for the providers than it would be if you provide a non-custodial solution. Totally agree with you.
Thank you for the comment. So usually most of our clients consider non-custodial approaches, but some others might choose custodial if they believe that this is justified. So this is my take on my aspects of technical infrastructure. And passing on back the board to you, Janina, it would be cool to hear your take on maybe kind of integration of legal, technical, and other questions. What do you see the main thing that projects do wrong, or maybe the main point they miss that hinders their success in execution of the offerings?
Well, there are a number of points, but I see like the most common mistakes or pitfalls. First of all, thank you a lot for the great overview about the technical issues, about all of these 3 layers. I really love it. I think that, again, like it's so useful to just, I mean, when we work in the project, we do not discuss really the overview and the bigger picture and how it works in general. And it is so great that to get the bigger picture, what's done or what has been done on your side before you even start talking with clients about tokenizing their real estate objects. That is really great. Thank you a lot. Really appreciate it and really loved how you summed it up. I think, well, I'm not talking about legal issues right now, but again, I would say that a lot of projects, obviously, that it is a project itself. It should be considered a small IPO. It means you need to either designate someone within your team or even hire someone for half a year, who would be responsible of this project and would help other professionals involved, tech, legal, compliance, investors relations, gain inputs from, let's say, the founders from inside of the project, which are needed for other professionals. And that's why I think, it is really quite a process, and it requires a lot of inputs. If we talk about bank accounts, all of the normal information, like passport copies and all of the information on the beneficial owners and their source of funds, and then disclosure of the full corporate structure, disclosure of all the information on the objects, financial model, which need to be included into the private placement memorandum. And then normally, I think what we face in, let's say, perception of a lot of projects, especially not coming from US or EU region, but let's say outside US and EU, where people are not that much used to the same level of regulatory scrutiny or compliance, that they that they find us boring, first of all, for sure, and also asking too many questions for unknown reason. But this is not the case. This is just I believe even if you use a vehicle somewhere offshore, Cayman or BVI, etc., even they have substance and presence requirements on a certain level. Even they have certain compliance and regulatory rules which they didn't used to have several years ago. And if we talk about US or EU, the regulatory compliance level, even if we do a private placement memorandum, even if you target investors not getting a prospectus register, make use of the exemptions, like qualified investors on the 100K denomination, maximum 100 persons per country, etc. Still, we ask you actually for full disclosure, because you have to, in my opinion, also, if I invest in the project as an investor myself, of course, this is the work which is normally done by an asset manager or financial advisor, but they do screening of all of the projects, and they check all of these, let's say, 10 points which are important, including jurisdiction, beneficial owners, decent financial model, etc. And you have to deliver it on the one hand from a regulator perspective, but on the other hand also to make your project more attractive to investors. Full disclosure, full transparency, clear business model, clear, I don't know, break-even point or timeline where you are going to pay dividends. If this is let's say, normally commercial properties, they already have some cash flow, or they know approximately when they're going to start generate some cash flow. This just helps both us to structure your project in a nice, legal, regulatory compliant way, but on the other hand, helps you to attract investors because they see these guys can do first of all, they have a clear picture, they have a clear corporate structure, and they can do their homework. They can prepare the project to introduce it to investors. And this is what a lot of projects oversee. They think we ask, we send them the checklist with everything. We do not come up with new questions. Normally we have like standard email to prepare everything for the banks, a kind of standard checklist where we need to start with offering documents. And then of course, if they under-deliver, and most of the projects under-deliver, at least with the first attempt, it is okay. All of us, no one is perfect. During my time at ISIC, we used to say no one is perfect, only Chuck Norris. Some old-fashioned joke. We also do not perfect from our first attempt, but then you need to understand with the second and third attempt, delivering information to us, to you, to deliver financial model, or also to, let's say, investors relations or marketing persons, which need to pack it better from the marketing perspective. We help you to make you more transparent and attractive to investors, and that's why we ask so many questions. Not because we are too dumb or too boring or don't want to torture our clients. No way. So yeah, this has been really emotional because that's what we deal with on an everyday basis. And hopefully in this emotional form, I made it more understandable, and hope some of the projects will watch and understand why we ask them so many questions.
You came up very authentic there, and this is and I agree with your sentiments there, that essentially, if you want people to give you money, you want them to trust you. And one of the best ways to invoke trust is disclosure and transparency. And obviously transparency, and maybe people like speaking about transparency in words because it sounds beautiful, but when you come to practice of transparency, it is actually hard, because you need to build a system of transparency. You need to build a system for continuously delivering and collecting necessary information. And then now you think about transparency, not in terms of emotional, not in emotional terms, but in practical terms. That is, if I invest this and this amount of effort into creating systems of transparency and disclosure, what do I get in return? And in most instances, what you get is more than justifies the effort in creating transparency, because competition for money is stiff, especially now in the high interest rate environment. And you, in order to win this competition, you obviously want to have an attractive asset, an attractive business. You want to have to show that you have sustainable competitive advantage. You have a moat, you have a great product and team, etc. But in addition to that, you want to create trust for people to know that they will at all points know how their funds are being used, how their investment is doing, and what can they expect, and then budget into their own plans in order for them to be transparent to their funders as well. So this is transparency all the way down, starting from you. And from this perspective, even though it is challenging, it always delivers a great ROI to focus on proper disclosure. So I totally agree with your point there.
Sure. Thank you a lot for your comment. I also had one more question to you regarding the tech part. It would be great if you could just shed some light on, because I know that, for example, with bonds, the distribution can be, let's say, automized on blockchain if you have payouts, and the same with dividends. Could you shed some lights on how this is done? Give us a short overview, because this is also, I believe, I mean, in a traditional world, we do not have it. Normally, to have any kind of distribution, it doesn't work automatically, right?
Sure. So we need to distinguish distributions of dividends or interest payouts in fiat and in crypto. If you're speaking in crypto, you can have high degree of automation. And in practice, it will work in such a way that there is a type of smart contracts that are called there are certain smart contracts that have a so-called must send function that allows you to send funds from that smart contract to a specified list of users in a specified proportion. So what you have to do is you have to upload this list, and this list can be taken from your list of shareholders. For example, in our platforms, the dividend distribution works in such a way that you can choose either to just distribute to all token holders proportionally, or you can distribute to a customized list if you have some special kind of distribution by uploading a CSV file. So you specify the list from which the distribution would be taken, then you send the amount to be distributed to the wallet. In our infrastructure, we call this a treasury wallet. So this would mean that if you receive, for example, if you're real estate, if you receive rent payments in fiat, and then you send them to your account in AMI, in exchange, etc., you exchange it for USDT, you withdraw it to that treasury wallet, and then you specify the list from which the distribution has to happen, and you confirm it by signing the transaction with your wallet, and then the funds go from that wallet. And there are also two ways to do it that differ in transaction fees. Because one way to do, because a must send is still counted as multiple transactions and not a single transaction, and therefore the transaction fees are still higher than you would have as a standard transaction. One way, and on chains like Polygon, this isn't a big deal, but this is still something to be aware of. So one way to do it is to have transaction fees paid by you. So in this case, you authorize the transactions and then tokens are sent. Another approach which you use is also the claim mechanic. When you authorize the dividend or interest payment, and then investors have to log in on their side and claim that payment in order to receive it, and then the fees are paid on their side because they basically confirm and authorize the receival of their part of the distribution. So this is another mechanic that can be implemented from the perspective of transaction fees, and it also has the benefit of investors confirming their wallet address. That is, because unlike security token, transactions with USDT cannot be revoked, and if you send them to the wrong wallet, like that money is lost. And so there is a benefit in investors actually claiming that payment, but
like additional verification,
indirectly confirming that their wallet address hasn't changed and everything is okay. So this is another way to do it. So this is in crypto. There is still a few steps involved, like choosing the list and sending the crypto to that wallet. But overall, the actual act of sending the tokens is automated. In fiat, unfortunately, at this point, we can't do that. Maybe it is possible via integrations with some if you have an EMI that would issue accounts to all of your investors and you have everything within one provider and one system, then it would be possible. But usually EMI would charge investors for maintaining their account. So it would make sense only for really large issuances, for frequent distributions, and for large dividend payments. In other cases, probably it would make sense to do it in an old-fashioned way by just sending wire transfers. So this is how it works in the case of fiat distributions. And you might potentially split your list of investors into, you might have some investors who prefer payments in crypto, you do it in an easy way, and then there are some investors who prefer in fiat, and maybe you probably can better comment on whether it makes sense from a legal perspective, but you might offer some incentive for dividends to be distributed in crypto. So for example, in the case of crypto, all transaction fees are on your side, and in case of fiat transfer, they are on investor side, and therefore it is more advantageous for them to do it in crypto, for example.
Yeah, kind of nudge investors to choose a solution which is actually more cost efficient, right? Or in general more efficient. Well, that's very nice overview. Thank you a lot. I think it was also really useful, and this is also, in my opinion, one of the advantages which is evolving with the time, because to have tokenized securities in general and tokenized securities for real estate for the sake of distribution, because we are having more and more privately issued, let's say, CBDCs, and we already have in MiCA as a regulation for private issuance the EMTs, the e-money tokens, and the asset reference tokens. Well, especially the EMTs. This is the regulation for private issuers of tokenized fiat money, of private CBDCs. And this is already there. I mean, the regulation is there, of course, and I think in the next years, and we see it also that the central banks of some countries do the experiments that larger banks or even banking groups try to issue those CBDCs, because it makes a lot of transactions, a lot of processes can be automated and can be made much more efficient than they are right now using the let's say tokenized CBDCs, which will be e-money tokens under MiCA. So yeah, I think this is evolving or moving this direction. And one of the last questions that I would like to discuss with you is, could you mention, I mean, without mentioning the client, but maybe an interesting case of real estate tokenization, not necessarily Europe, maybe US, and mention what was specifically interesting in this case for you. Okay, Boris, I guess we lost you again. Okay, yeah, you're back. That's great. Okay. I have one maybe last question to discuss before we resume the session. Could you mention one of the last, or maybe one of the real estate tokenization cases that you had? Not necessarily in Europe, maybe US, and what was it that you specifically liked about this case, or was specifically difficult about this case? Yeah.
There are actually many clients I would love to talk about, so I'm not even sure which one to choose. If you're speaking about the US, one of the recent cases that was launched with us is called GL Capital, and what I like about this one is that it is an extension of existing property business and type of property transactions. That is what I commonly see with some of the requests we're getting, is people who are only starting to get involved in the property business and use tokenization as a primary approach to. Did I freeze again? I freeze it again, did it?
No, you're there. We can see you. Oh no, that's frozen right now a little bit. Now you're back. So it was about, you found it specifically interesting that, let's say, new developers which are entering the market, that they start straightforward with tokenization of real estate as the method of fundraising, right?
Okay, I'm back. My internet is decided to really betray me today, unfortunately.
So yeah, about new developers and that they choose tokenization as the primary method of fundraising to acquire new objects.
Yes, so this is what I commonly observe, and sometimes it is pretty challenging for such clients to pursue tokenization because they have to solve multiple challenges as well. Challenges related to fundraising, to setting up tokenization vehicles, etc., and additionally challenges related to starting a real estate business. So it can be pretty challenging for these kinds of clients. And what I like about Jill Capital is that this is the kind of client that has already established investor relations and database of investors who are purchasing their property. They have already executed multiple transactions with very attractive returns. And so what they did, they basically copy-pasted the existing structure, but implemented it on-chain with existing marketing channels. This is actually one of the few deals that has been pre-subscribed before the token offering has even launched, which is pretty rare, and everything went super smoothly. So you maybe expected me to talk about some cases that are more on the challenging side, but most cases I would say are challenging in this or another way. And it is curious to highlight the ones that come in an easy and smooth way. And I like more professional developer, serial entrepreneurs coming into tokenization because you have the best position in order to leverage all of the possible benefits, to leverage your expertise and existing
Absolutely.
existing ground in order to gain all of the benefits.
Absolutely. Just to add on that, we had nice projects about, let's say, hotel tokenization, Mexico, Thailand, but then I had an impression, first of all, they didn't have an experience with, let's say, this level of regulatory scrutiny or compliance, which makes it really, really difficult for them to move through the project steps. And of course, also, just as you mentioned, for more experienced real estate developers, they already know the drill. They've been setting up structures all over the world for their projects. And specifically, we see in the case where we're working with UK real estate tokenization, we see more requests from UK coming because professional real estate developers discover that, I mean, maybe it's a little bit too early, let's say, for the mainstream with real estate tokenization right now, but in like 3-4 years, it might be already too late because the share of the market will be already taken by other players, which had enough courage to start earlier, to experiment, to invest their time and money in those experiments. And yes, it makes well, it is more efficient, and it is more pleasure to work with those which are already, let's say, trained and know how the drill works, because then it is quite efficient and everything can be done, not, let's say, within a year, but within 3, 4, 6 months. And of course, it is also a big advantage if a project already has or the project founders have their own trusted network of high net worth individuals, of qualified investors, friends, business partners, because they have already trust in those founders. And let's say they would bet on those founders in their next project. And we see that those projects, yes, they get financing way quicker than even if you involve professional private equity, marketing, and investors relations consultants. In my experience, it works even faster because those founders who already know how to sell their projects and have a good network, they are subscribed really fast. And sometimes, as you say, even before the start of the actual token offering, they are almost fully subscribed. That's so true.
And that also helps with actually getting through to the end of the project, because if you know that this is going to be purchased, if you know the end game, then even if you do have some challenges or bumps along the way, it's easier to find the motivation to get them, to overcome them and get the project done. So this is another added benefit.
Yeah, that's so true. Yeah, those founders who already have experience with good fundraising and know that most likely they're going to raise, then yeah, that helps a lot with the motivation. That's so true. Thank you a lot. I would really like to resume this session. Thank you a lot to those of you who have been listening on LinkedIn. Thank you to all of you who would be listening after the session will be over. Thank you, Boris, for the great overview of the technical part in the process, and for your question and your time. It's been a pleasure working and talking with you. Looking forward to, I guess, meeting you supposedly in Davos, but we could discuss later on, not on the session. Good.
Likewise, it was great talking to you. You made great points, and thank you again for inviting me.
Thank you a lot. Bye everyone. Have a great rest of Friday. Wish you to complete everything what needs to be done before Christmas and to survive. and hope to meet most of you guys in Davos. It's gonna be great week. Everything related to blockchain tokenization. We're gonna dive really deep into all of that live and not only online.